Bitcoin's been on a serious run lately, so I'll break down the next key price levels to watch, including upside targets and downside supports, without trying to guess the exact top or bottom. Quick disclaimer, this is not financial advice, just education and market structure, and all prices are as of recording. I'm looking at zones, not perfect single numbers, and I care more about candle closes than quick wicks. As of recording, Bitcoin is around the current price, which will be shown as a dynamic placeholder in this video. Upside levels to watch start with the first checkpoint around 97.7K to 98K. This nearby ceiling is where price can stall, reject, or break out and retest. Next is the big psychological zone, 99K to 100K, where liquidity tends to cluster around round numbers. A common pattern here is the first tag pulling back. Then a second attempt decides whether price breaks and holds or rejects. If Bitcoin can break above 100K and hold, I'm watching 105K, and then 110K is momentum targets. Beyond that, the bigger resistance zone is around 122K to 126K, a major overhead area from the prior peak. Downside levels to watch start with the current pivot area around 96K. Then 95K is the first clean round number support. In a strong trend, dips are often bought around these areas. Next is a key local support zone around 94.6K. Losing it and failing to reclaim can signal a cooling move. Below that, I'm watching 93.7K to 94K, then a bigger decision zone around 90K to 91K, the line in the sand. If things get heavy, the next zones after that are around 88K and then 84K. How to use these levels: break above resistance and hold, then look for a retest and continuation as acceptance. If price breaks down through support and fails to reclaim it, the next support zone becomes the likely target. The goal isn't perfection, it's risk management around high probability zones with market confirmation. If this helped, hit like and subscribe, and I'll see you in the next one. Summary: monitor the 97.7K, 98K ceiling, the 99K, 100K psychological zone, then 105K, 110K, and the 122K, 126K resistance area. On the downside, watch 96K, 95K, 94.6K, 93.7, 94K, 90, 91K, then the IK and AFKARK is the next significant zones. Remember, the goal is to build a framework for risk and probability, not a crystal ball prediction. As price moves, I'll be watching how the candles close and where liquidity concentrates around these zones. This video uses zones rather than precise figures because markets move in ranges and patterns. If you want more technical breakdowns, let me know in the comments and I'll tailor future videos. Back to Bitcoin, the current stance sits near a pivot around the mid-90s to low 100K range depending on the moment. We've outlined clear upside and downside checkpoints to keep risk well managed as the market evolves. The next big milestone to watch is the psychological 100K mark, a powerful magnet for liquidity and trader activity. If price breaks above 100K and holds, the momentum targets become 105K and 110K as practical milestones. The broader resistance zone around 122K and 126K remains a critical test for the market structure. On the downside, the 96K pivot acts as a first line of defense for bulls. Below 96K, 95K, and 94.6K serve as important supports where buyers may reappear. If the price slides further, 93.7, 94K, and 90 to 91K become larger decision zones for market direction. Further downside areas of interest are around 88K and then 84, where longer-term risk management comes into play. The framework I described applies to any market. Manage risk around high probability zones and watch for market confirmation. If you found this helpful, consider liking and subscribing, and I'll see you in the next video. Recap: upside checkpoints near 97.7K, 98K, 99K, 100K, then 105K, 110K, and the 122K, 126K resistance. Downside checkpoints: 96K, 95K, 94.6K, 93.7, 94K, 90, 91K. Then AAK and A4K as major zones. The goal remains risk management and using zones to guide decisions, not trying to time every move. Candles closing and liquidity concentration are the clues you should watch as price moves. Markets move in ranges and patterns, so zones help you stay aligned with structure. If you want more technical breakdowns, tell me in the comments and I'll tailor future videos.